First to you, Chris. Question about the PMI number over the weekend out of China. How's the Aussie dollar so far reacted to that? I know that there were whispers that the number could come in below 50. So, of course, on that measure, it was certainly a lot better than expected, despite it being the worst reading in about 17 months or so, the worst level.
Yes, we've seen a pretty mild reaction from the Aussie dollar. It opened up slightly this morning. On Friday's close, we saw the Aussie about 90.40, so 90.4 US cents, and we haven't gone a lot over that at the moment. The Aussie dollars, although in the domestic session, could be looking to trade higher and closer to that resistance level of 90.67 that we're seeing. But all in all, it's been a pretty soft response from the Australian dollar this morning, despite I think that's what we needed to see. We needed to see better than expected figures. However, still show that that China growth is moderating at a sustainable pace.
And your impressions as well over at where are we? Jim Forex at Oz Forex. You got you there yet?
One would have expected the Aussie probably to trade a little bit low on the back of that, but it just goes to show that how resilient the Aussie is at the moment, and all eyes are still watching, I guess, tomorrow's RBA announcement, and I guess the accompanying statement to that, but also the monetary policy statement later in the week from the RBA for any sort of further direction. The Aussie dollar is still looking quite strong on a short-term basis at the moment.
Yeah, you say on a short-term basis, but we know certainly to both of you, and maybe I'll direct this one to Chris then, that a lot of event risk in the US this week, culminating in the jobs print. Of all the numbers out, what's going to perhaps see a rush back to greenbacks and a dumping of high-risk, high-yielders like the Aussie?
Well, at this point, the fortunes of the greenback don't look too healthy at all. On Friday, there's a large question mark about these non-farm payrolls, and if we have a look in the recent past, I think it's fair to say, although we've seen strong performance from and outperforming equity markets in the States, economic data on balance has been less than convincing, and it's this cautious undertone that hasn't provided any support to the greenback, and I'll be watching this closely. I think in the event of less than convincing economic or non-farm payroll figures in the States on Friday, this may translate to continuing weakness from the greenback, broad weakness there. So if we have a look at across the month, we've seen some pretty bad performance from the US dollar, and Aussie's trading around about 7.6% higher. We've seen the euro up about 6.7% higher as well. So that common theme is right across all dollar pairs, and we are obviously seeing the Japanese yen become the beneficiary of this cautious undertone.
Well, if the data is less than convincing, to Jim, to you then, if the mutterings go beyond just mutterings, if the Fed is right and there will be more quantitative easing, will we see not just a relief rally from equity markets, but will we see a relief rise in the greenback if that does happen? And it looks as if it may happen sooner than later.
One would expect to see that kind of relief rally, as you said, on the back of any of that. And I guess the key, earlier in this week, ahead of those payroll data on Friday, will be Bernanke and Geithner's talks this week. Bernanke talking about the challenges to the US economy, which the title itself suggests is going to be pretty downbeat, especially on the back of the comments that have come out of the Fed in recent times. So, having said that, Geithner's talk later suggests what the next steps are for financial reform. So, as you said, we could get something from Geithner this week, and possibly the risk is that we do get a relief type rally on the back of those comments, given that there has been a lot of negativity already priced in. But I guess one thing's for sure, it's going to be a very volatile week for the US dollar. Yeah,
interesting, because Jim, by contrast, you've got the heap of data which will come out of the United States, but in the Eurozone, it's fairly light on data. I think highlights that I can see is maybe a PMI, some retail sales, some German industrial orders, but really not a big event week for that part of the world. You've got the BOE and ECB decisions. They're expected to be non-events. Do you expect currency markets to trade in a particular way given such heavy data in the US and so light on in Europe?
Well, I think the Euro-US is likely to continue to track sideways around that 1.3 level. There is some risk that we see it will trade up above 1.31 if that US dollar negativity continues, but it's not going to come, we think, anyway, from any sort of specific Euro data, as you said. Possibly some comments from the ECB on Thursday, a little bit more upbeat, could provide some impetus for a rally in the Euro-US, but we think it's more likely to track sideways.
Chris, are they going to talk about withdrawing the emergency measures during the GFC?
Don't believe so. If we have a look at, looking at the euro-dollar pair, one thing that we're seeing there is some bullish price action towards the 200-day exponential moving average, and of course from there the 200-day simple moving average. And I think that what we're seeing here is what we will see from the ECB on Friday is some fairly bullish remarks. European economy over the last month has had some very positive economic information, and you could imagine that that's the ECB President Trichet would be quite excited about that and may put forward a sort of a hawkish view and outlook for the European economy, and this could translate to some possible gains for the euro.
Well, indeed, but Jim, just as the euro gains that ground, does it not unsettle any early traction that those exporters are starting to eke out? Is he not going to shoot the exporters in the foot proverbially?
Well, Euro-US still around 1.3 is not necessarily too high a level. Historically speaking, is still slightly below averages, I guess. So I don't think any sort of move even to 135 is really going to hurt exporters that much.
What would it take to really for them to start feeling the pain?
I think, if you're talking levels around 1.4 or higher, definitely, particularly the German export market.
And so just set out then, Jim, your forecast at the moment.
For euro, we do think in the short term we can see that trade above 131 up towards 132 or 132.5, but we're not too bullish beyond that. We think the negativity or the chance of, a double dip recession in the US is still relatively low at this point, and so at some point that US dollar will continue to strengthen, and we'll see that euro push back towards probably 125.
And Chris, how does that compare with what you're saying at GoMarkets?
Well, it's fairly spot on. I mean, I'm of the opinion this is not necessarily, although I did mention that we could see some hawkish remarks about from the ECB, I think that what we're seeing here is we have to stick with the common theme that's been guiding the greenback, and we're seeing less convincing news out of and that cautious undertone translating to some weakness of the greenback. I see no reason for that to change, and this by default will see the euro trade higher regardless of any hawkish movements from the ECB this week. But as I mentioned before, sorry, Carson?
No, I was just going to say, if the bond market is the real forward-looking measure on all of this and yields continue to slide, Jim was saying he's not of the double dip school. He's not believing it will go down that route. Are you saying that maybe we're going to hear from the Fed more than just sound gloomy, that there will be a solution put on the table this week?
Absolutely, because I don't think what's come out of the Fed in the last week has really helped the cause. So they'll be looking to correct this. I mean, what we've seen from them is the word deflation thrown around, and of course John Bullard came out and mentioned and likened the US economy to that of Japan. So this does not bode well for the US economy, and of course unusually uncertain is the word that Ben Bernanke described the US economy. All of these things together, they will need to obviously address what's happening in the future in terms of whether it be further stimulus required, but they need to obviously change sentiment somewhat. And I think what we really need to be watching here is what happens when these corporate earnings are off the table. What happens when they're done and dusted for the year? What will this do to the fortunes of the US economy and investor sentiment?
And Jim, just to finish off on you for today, when you look at the week ahead, where are you seeing some opportunities or trading opportunities that you're looking at?
Again, probably on that Euro-US, if we get a push higher and some more hawkish comments late in the week, around that 132, 132.5 would be probably a good spot to short the Euro-US.
Okay, good stuff. Jim, thank you. And
Thank you.
Also to Chris from GoMarkets. Thanks for your time.
Thank you.